the U.S. is already, it isn't just Trump, by the way. Biden declared in April of last year a commercial war on China. And China, by the way, they do have an ultimate counter weapon against tariffs. The Chinese can do all kinds of things and send the U.S. economy into a total tailspin if they wanted to. If you start pushing China around and strong-arming them, believe me, they know what to do. And they will do it.
Implement a 1 million unit Bitcoin purchase program over a set period of time, mirroring the size and scope of gold reserves held by the United States. What do you think about that?
Well, Senator Loomis has just entered Hanke's Encyclopedia of Economic Stupidity.
It's the day before Thanksgiving, so happy Thanksgiving if you're in the U.S. The Fed's preferred measure of inflation, PCE, rises 2.3%. Data came in today. We'll talk about this. And what's next for the economy once Trump introduces tariffs? We'll also be talking about Bitcoin and the Department of Government Efficiency. Will it actually work? Which government agencies should and could be cut? Professor Hanke joins us once more. Steve Hanke is a professor of applied economics at Johns Hopkins University. Professor Hanke, welcome back. Happy Thanksgiving. Thank you for joining us.
Thank you, David. As usual, great to be with you.
Great to be with you as always. I appreciate you joining us the night before you have turkey with your family. So thanks for taking the time to do this. Before we talk about today's PCE data and your outlook for inflation overall, let's talk about this question that I didn't have a chance to ask you last time you were on the show. People can check out our interview with Professor Hanke in the link down below. Tariffs, we've talked about the impact of tariffs. You don't like tariffs overall, but are tariffs really that bad? Now, recall that in the Great Depression of the 1930s, one of the causes or one of the triggers of the Great Depression was the introduction of the Smoot-Hawley tariffs, which saw tariffs on more than 20,000 imported goods. It was originally created to protect American farmers, but many economists, including yourself, believe it triggered the Great Depression. What about this time? Can Trump's tariffs be like the Smoot-Hawley tariffs of the late 1920s?
Well, the Smoot-Hawley tariffs did contribute to the Great Depression. There were two aspects. There was the tariffs and the fact that the money supply contracted massively between 1929 and 1933. So that was a 1-2 punch that gave us a Great Depression. And remember, and just to put this in contemporary setting, we have had since July of 2022 a contraction in the money supply. That's only happened 4 times since the Fed was established in 1913. And one of those times was 1929, 1933, huge contraction in the money supply and the Great Depression. But the Smoot-Hawley tariff, let's get into that just a minute. So the tariffs were put in by Congress, legislated, and there was a commission, a tariff commission that was set up associated with it that was reviewing the tariffs and as they went along. So it was a very systematic thing that came from the Congress. Trump it's coming from the White House. It's not coming from Congress. And there's no tariff commission or anybody else to be reviewing anything. And I expect it'll be like Trump's tariffs were during his first presidency. And that is, they'll be very ad hoc, kind of very arbitrary in a way, not systematic. And there'll be many, many exemptions that are allowed under them. That happened with the original or first Trump term. And so you'll have all kinds of lobbyists running around Washington trying to get exemptions from the tariffs because, of course, no one wants the tariffs. They're bad news.
The actual impact on individual items aside, would tariffs under Trump cause a collapse in international trade? Just the perception of tariffs will cause partners to stop trading with each other, as was the case after Smoot-Hawley.
Well, there'll be a reaction if a tariff is imposed on you. Already, Mexico and Canada, you're up there in north of the border, and Trudeau has already threatened some kind of counter moves. So tariffs are a great way to make enemies, and the U.S. seems to be pretty good at that lately. You know, we've created the so-called southern tier of countries, the BRICS, and their affiliated members of that alliance, as well as many other developing countries, are pretty sour on the U.S. right now. And that's because of something very related to tariffs. That's sanctions. Sanctions are the same thing as tariffs and quotas. They're protectionist measures. And we're using them. We've started using them actually with Bush, and then Obama ramped them up. And then Trump even ramped them up more. Biden even ramped them up more. Now Trump wants to ramp them up even more. So all of this protectionist cancer is in the international system, and a lot of it is being spawned right here in the U.S.
What do you think is going to happen to the unemployment rate once tariffs are introduced? Could we lose a lot of jobs in the manufacturing sector, or any sector that is reliant on exports?
Well, it will hurt those. And I think the key thing, it's very hard to make broad brush statements of what's going to happen to the unemployment rate and so forth. You've got to go sector by sector, you know, almost company by company to get the impact of what this is going to be. So if you're an importer and there's a huge supply chain related to imports, of course they're going to be hurt, because a tariff is just like a sales tax. And if you put a sales tax on something, you don't sell as much of it. It's a fairly simple thing to start thinking through. But and also the thing that will be, I think, more damaging and be bad for the U.S. reputation is that Trump says, "Oh, I'm not going to have an overall blanket thing like Smoot-Hawley. This is going to be selective. I'm going to use these as a club to get people to do what I want them to do." Now that kind of thing, running around, the president of the United States running around with a tariff club, threatening to beat people over the head if they don't adopt whatever he wants them to adopt. I mean, you know, he wants Mexico to, you know, cut off the flow of immigrants and cut off fentanyl coming into the United States, and crack down on the gangs, the cartels in Mexico. And he's saying, if you don't do this, I'm putting a tariff on you. Well, that is not really what we call diplomacy. Maybe it's Trump's kind of diplomacy, but this is pretty primitive stuff, and it's bound to create lots of enemies. It's really bad news. Now let me go back. By the way, you talked about Smoot-Hawley, which is very important. And it was a contributor to the Great Depression. There's absolutely no question about it. But it wasn't used as like a club going after everybody. It was imposed by Congress, and then all the other countries started reacting to it by putting their own tariffs on, and international trade collapsed. And all that was motivated, or their background was the money supply going down, the money supply contracting big time. So it just sucked everything down. It was a deadly cocktail. Now, let me go back to the Reagan administration. Remember, he was elected in 1980. I was one of his advisors, and Reagan was a free market, free trade guy, and that was his rhetoric. He believed in that. Now, Trump is much different. He believes in mercantilism and protectionism. And his rhetoric matches that. That's what he talks about. Reagan was talking about free trade because that's what he believed in. And at that time, the Council of Economic Advisors, where I was on the staff, as well as the Office of Management and Budget, which was run by David Stockman at the time, and the U.S. Treasury, we were all in line with Reagan and free trade. We were all going for free trade. But the Commerce Department, Mac Baldridge was the Secretary of Commerce at the time, and he was the kind of guy, he was a mercantilist. He never saw a trade restraint that he didn't like. And he had a big audience on Capitol Hill. You had a lot of congressmen and senators who, remember 1980, Japan was the enemy. We had a trade deficit. Japan was flooding the market with in particular cars, textiles, and footwear, you name it. So you had a lot of pressure coming from Congress going through the Commerce Department that wanted restrictions. They wanted tariffs and quotas. And we got them, by the way. Most people don't realize with the Reagan administration, he was a free trader. He believed in it. He had the Council of Economic Advisors, the OMB, and the Treasury all in line with him. But we couldn't fight off these mercantilists. And as a result, we actually put in more trade restrictions in the Reagan administration than had occurred since the Hoover administration. So let's put it this way. We were in kind of a strategic retreat from free trade, even during the Reagan years. That's really what was going on. And the most famous thing were the voluntary restrictions on importation of Japanese automobiles, the VRA, as they called it. And those voluntary restrictions meant that the Japanese agreed that they would restrict the exports of automobiles to the United States. And the Japanese are very clever about this. Yeah, they restricted them, but the only thing they would send the United States were high-end Lexus and Toyotas with high margins, and they made out like bandits. They met this quota. This was a voluntary quota they agreed to with the United States. It wasn't mandated that they do this. They agreed to it, but they just sent expensive cars with high margins. They made huge profits. But we also had restrictions on steel then in Reagan's years, footwear, textiles and apparel. And it was, they were all backfired. They were all bad.
Before we move forward with the video, I want to take a moment to talk about our sponsor today, Novium, which has a truly unique product, possibly the coolest pen I've personally seen. This Black Friday, Novium is offering its biggest deal of the year with a limited time 20% discount. If you're looking for a standout gift, the Hover Pen Interstellar defies gravity, literally levitating on a stand using magnets to make an elegant statement in any office or home setting. This is definitely a gift that will be remembered. The Hover Pen is refillable, crafted from aircraft-grade aluminum, and designed with ergonomics in mind for a comfortable writing experience. It has even been recognized by Time as one of the best inventions of the year. Novium also offers the Hover Pen Future, a fountain and rollerball option for those who prefer versatility. Don't miss this 20% off deal. Use the code DavidLynn at checkout. Scan the QR code here, or check out the link in the description down below to get yours while this Black Friday offer lasts. One thing we have to consider is whether or not the economy, the American economy, is more resilient to counter tariffs this time versus the late 1920s. Now, you brought up the Mexican president earlier this week. She announced that she would impose tariffs on U.S. exports, so Mexican tariffs of their own in response. So everybody is going to impose tariffs on everybody else, basically Americans on their trade partners and other trade partners on the U.S. So two things may happen. I'll let you comment on this. One, American consumers may realize higher relative prices on the consumer goods from imported goods from other countries because of tariffs, and the export industry of the U.S. May see either decreased margins or they have to raise their prices. Can the American manufacturing sector absorb such losses? Can the American consumer absorb higher costs?
Well, the last point that you raised, you've got the American consumer in your picture, and you've got that's clear, and they're going to face basically a sales tax on things that they import,
yes,
and consume. That's a consumer. The exporters are probably some of them will run into rough seas and have problems. There's no question about that. Now, the one thing you kind of alluded to, you said manufacturing. You used the word manufacturing. A lot of imports to the United States aren't consumer goods. They're intermediate inputs that go into production of things.
That's right.
And those, you have complicated supply chains, and those will be disrupted and affected. Now, my guess is, you said, will it be worse than Smoot-Hawley or the Reagan years and so forth? It probably won't be quite as bad. It probably will be a little bit worse because the U.S. economy isn't as free market and as flexible as it used to be. Since 1980, we've had one administration after another putting all kinds of regulations and restrictions on U.S. business. And if by any measure, the U.S. economy is not as free market as it was when Reagan was president. It is less free market. It is less flexible. And that means it will be less able to adjust to shocks of one sort or another. So that's a broad picture of the thing.
What's going to happen to the U.S. dollar? The unintended consequences of currency pairs. The Canadian dollar went down versus the U.S. dollar this week. The Mexican peso went down versus the U.S. dollar this week because of what we talked about. What will happen to the dollar, you think?
Well, number one, the dollar right now is just unbelievably strong. I mean, it's at not the strongest point it's ever been against the euro, which is the most important currency pair. Actually, is the U.S. dollar euro. It's down around 105. It's been down to parity before.
Yeah,
but so it'll be a little bit like the commodity currencies. We talk about the commodity currencies like the Australian dollar, the Canadian dollar, and so forth. The Brazilian real. Those are commodity currencies because those countries export a lot of commodities. And when commodity prices go up, their currencies tend to get relatively strong. And of course, when the prices of commodities go down, the Canadian dollar, the loonie. I just love that. the loonie gets a little bit weaker. So my guess is you'll have countries. There are groups of countries that are highly dependent on exports to the United States, and if those countries are targeted by Trump, their currencies will probably weaken. You just said the Canadian dollar and Mexican peso.
Yeah.
So you'll have to be looking at these currency pairs like they look at commodity pairs. We'll have tariff pairs, you see.
Yeah, Trump and Vance both said they wanted a weaker dollar during their campaign. This is before the election win. So, I'm just speculating here. Inadvertently, they may be shooting themselves in the foot if a weaker dollar is their policy.
Oh, yeah, they are, because they've uttered this, but ever since the election, the dollar has soared. Yeah. It's got tremendous strength. Now, the big, we don't have, like in 1980, the big one that the U.S., the biggest country supplying the U.S. with exports, filling the export deficit in the United States, isn't Japan, it's China. China has taken over from Japan. And China, by the way, they do have an ultimate counter weapon against tariffs, and that's they just let the yuan weaken. If you put a tariff on what if you put a tariff of 20% on everything coming out of China, and then China says, "Oh, okay, fellas, we're going to let the yuan depreciate against the U.S. dollar 20%."
Can you clarify? Because they have a managed float. It's trading within a band.
the Chinese, yeah, you said manage. The Chinese can do any damn thing they want to.
So they'll break their band.
Oh, I'm not predicting they will. I said
Yeah.
potentially.
They could. Okay.
Potentially,
they
David,
could do it if they want to.
They could. The tit for tat. The Chinese can do all kinds of things. By the way, they could cut us off from critical materials and send the U.S. economy into a total tailspin if they wanted to. And they have that on the drawing boards. They have been thinking about it. They have enunciated about it. Even Deng was talking about this. Deng said, OPEC has oil. China has rare earths. Deng actually said that. And they have a very precise plan that could upset the supply chains for lithium batteries, silicon, all kinds of critical materials. And the U.S. would be clueless. We are not prepared for this. Neither is Europe. So if you start pushing China around and strong arming them, believe me, they know what to do, and they will do it. And I'm just saying.
Yeah, critical minerals. Yes, is one thing. Yes, okay. What else could they do? What could they do with the financial sector? They own a lot of debt. Yeah.
Well, yeah, they could dump a lot of U.S. debt if they wanted to. They probably end up taking a loss on it. But again, these tariffs, it's a commercial war. The U.S. is already, it isn't just Trump, by the way. Biden declared in April of last year a commercial war on China.
Yes.
So the U.S. is engaged in a commercial war with China already, and the Chinese are prepared for it, and they know what to do. And I'm just saying one thing they could do, just so our viewers understand a simple counter move that they could do, would be to devalue the yuan by the same amount as the tariff. And by the way, they have room to do that right now because they have almost zero inflation. Their inflation target's 3%, and their inflation is 0.3% per year. So even if they let the currency, the yuan, sink, the inflationary effect of that, and it would be inflationary, by the way, would be in their favor, actually.
Okay, well, this is a developing story, so we'll have you back on again when more counter tariffs are announced. So we talked about Canada, Mexico. Let's see how China responds down the line. It's not even inauguration day yet. We'll see. Let's talk about the PCE data coming in today. So 2.3%, in line with expectations. Take a look at my screen, Professor. I want to show you this chart.
Yeah, 2 point. David, 2 point. Just to clarify, 2.3 was the headline PCE inflation number, but if you look at the core PCE, yes, which the Fed actually prefers, it was 2.8. Yes. Both of them went up just slightly, just a little. The October number was just slightly higher than September. It was in line with what the consensus was saying it would be. But go ahead, put that chart up.
Paulo Global Management put together this chart. They overlaid the current CPI of over the last 10 years versus the CPI of 1974 to 1982, which is this line here. And if you look at this green line, which is the current CPI, it looks like it's repeating 1966 to 1976. So I don't know what this means. If this means anything, if it's coming back.
This is the kind of nonsense you get into if you're on Wall Street. These Wall Street guys, they're data dependent. They have no theory of anything. They actually have no idea what's going on, because you have to have a theory to know what's going on. And with regard to inflation, you have to have a theory of national income determination. What is going to happen to nominal GDP going forward? And nominal GDP, remember, includes the real GDP and inflation. So you've got the inflation thing up here. So what is the only reliable theory? It's a quantity theory of money. You've got to look at the money supply. They don't. They just look at the data and come up with charts like this. Now, let me show you why this is nonsense.
Okay.
The chart is accurate, but the story behind it, the theory behind it, why do you see that first little peak mountain that you had in like 71, 72, 73? See that thing?
Yeah.
Now, Hanke's quantity theory of money, what happened then? The money supply shot up. That's why the peak went up. So we have an explanation. The money supply in 71 was growing at 15% year over year. Then 72, it was 14%. And 73, it was 11%. That's way higher than is consistent with a level of, they didn't have an inflation target then, but let's just plug in a 2% inflation target. It's way higher. It's probably growing double what it should have been growing there. So you had that peak. Then that money supply goes down. And what happened? Well, inflation. See, run your arrow. Then inflation. After 73, 74, it goes down. And then, boom, it goes up again. We had even a higher peak the next time. But the money supply went up. The money supply surged. It was going up 13% in 75, 13% in 76, 10% in 77. A lot of increase in the money supply. So if the money supply goes up, we'll have a repeat of what this chart.
Yeah. So we're not there yet. So simply overlaying two CPIs over two different decade periods is not indicative.
No, you got to put the money supply overlay in there, and that'll tell the story. And you'll see that the money supply with a lag, you got to lag at about 2 years.
Well, let's just remember take a look at Fed. All right, let's just take a look at this. We've shown this before. I'm going to show this M2 as a percentage change from a year ago, and as you can see, it's not yet at Hanke's golden growth rate of 6%. It's at 3%, but it is rising, Professor.
It is rising, but remember, the changes in the money supply go through a transmission mechanism, and it takes time for that to transmit itself through the economy.
I see.
And it takes, we're talking about inflation now, it takes between 12 and 24 months for those changes in the money supply to actually be transmitted through into inflation. And of course, the data dependent people, they don't realize that. They look at today's data, but they don't realize what caused the change in today's data are changes in the money supply that occurred a year or two ago. So this Apollo thing, I'm glad you put it up there because it's utter nonsense. Okay, but that's the kind of stuff you get from Wall Street. You get nonsense put out there every single day because you got these people. I think of my graduates from the university. You got some 26-year-old guy or gal that has no clue of what the hell's going on, producing these charts and whatnot.
Well, I encourage everybody.
By the way, confusing everybody. That's why. Why do people watch podcasts now? People watch podcasts. Why did Trump win the election? Because he had like 120 or 140 million views on podcasts that he did.
Yeah.
Harris had 4 million or something like that. This is a podcast world. This is basically a David Lynn story world. And why? Because you can have guests on for long enough that they can explain what they're talking about. And the regular news, you've got a little clip.
Yeah.
You've got a 30-second clip of some guy or gal talking. And the problem is that the talking heads that are doing the interviewing, they already have a narrative spun. They've got a story spun. they're telling some nonsensical story, and then they get somebody on there to give a 15-second or 30-second verification or confirmation of whatever the journalist's story happens to be.
Well, this is why your interviews with me do so well online, because people appreciate what you have to say. Let's turn the page now to look at the Department of Government Efficiency. Now, Elon Musk tweeted, let me just share my screen with you so you know what I'm looking at. Let's react to this together, Professor. Elon Musk tweeted Milton Friedman was the best. Here's Milton Friedman giving an interview, and the reporter was asking him about agencies, government agencies that he would like to cut. Take a listen. We're not going to watch all 4 minutes of it. We'll just watch the first minute, but I'd like you to get your reaction, please.
14 is a lot for television, so I want to just go right down the list quickly and have you give me a thumbs up or thumbs down. Keep them or abolish them. Department of Agriculture.
Abolish.
Gone. Department of Commerce.
Abolish.
Gone. Department of Defense.
Keep.
Keep it. Department of Education.
Abolish.
Gone. Energy.
Abolish.
Housing.
Except that energy ties in with the military.
Well, then we shove it under defense.
That's
the little
right.
bit that handles the nuclear,
Right, that ought to go under
plutonium
defense.
and so forth goes under defense, but we abolish the rest of it. Health and Human Services.
There is room for some public health activities to prevent contagion. Such a thing as, for example.
So you'd keep the National Institutes of Health, say, and the Center for Disease Control down
not
in
the National
Atlanta?
Institute.
No?
No, those are mostly research agencies. No, that's a question of whether the government should be involved in financing research.
And the answer is no.
Well, that's a very
Okay, he goes on to list a whole bunch of others. What do you think should be kept versus eliminated? The idea here is to streamline government bureaucracy, or eliminate bureaucracy as much as possible, and increase efficiency.
Okay, so there are a couple of comments. Number one, of course, you had my old friend and mentor Milton Friedman on there, which I agree with Friedman's take on. You want to shrink, eliminate. So and the best way to think about this, instead of going through department by department, right now the federal government spends about money $6.75 trillion a year. And that is equal to 23% of GDP. And Friedman's rule is, Friedman always used to say he'd be comfortable with the federal government spending about 10% of GDP. Not the current 23%, but about 10%. So roughly, you want to cut it in half. So forget the department by department by department. By the way, I do a lot of cutting in the Defense Department. They get us in more trouble than anything else. So I don't agree with Friedman on that. If we had a much smaller Defense Department, we probably wouldn't be sending missiles and so forth to Ukraine and armaments to Israel, and those wars would be stopped. The U.S. is funding 2 wars right now, and the Defense Department is up to their neck in the whole thing. So if we had a much smaller Defense Department that actually was defense, not offense.
Well, what about the Department of Education? Department of Education. You're an educator. How do you feel about cutting the Department of Education?
I was commissioned to be on the board of the Department of Education, and Trump actually was the one who gave me the presidential commission, and I with everybody else Trump had put on, was eliminated by Biden. That's the first time any president has ever eliminated any presidential commission. So that shows you what kind of a character Biden is. Now, why was Biden worried about Hanke being on the board? Because the Department of Education is the 3rd largest bank in the United States. All those student loans are managed and housed at the Department of Education. And certainly the Biden administration didn't want anyone looking into that very carefully. You get the picture?
Elaborate a bit more. Why not? What will we find if we look a little bit deeper into this?
Well, you'd find tremendous mismanagement of the loans that were housed in the Department of Education. A lot of them not being paid, being delinquent, and it's a utter and complete mess.
Why was this handled by the Department of Education and not the Treasury?
Well, it was handled originally privately.
Okay.
And it was Obama who did this. A lot of this mischief, by the way, Obama's hands are behind the thing. Now, Obama's very clever, and he kind of stays behind the curtain, but he's done a tremendous amount of damage in terms of regulations and changes in the way things are done. And this happens to be one of the Department of Education's malfeasance and mismanagement of student loans. And we're not talking about peanuts. I'm telling you, this is by asset size, this is the third largest bank in the United States of America.
Yes.
And you've got a bunch of literally incompetents running the thing. I can say incompetence with a capital I.
What changes would you have made if you were put in the board?
I don't know, because I hadn't had time to do the due diligence. We never were allowed to even get started. But believe me, that would have been the first thing I would have been looking at, to see how those loans were being managed, because that's where all the big money is over there. Now, let's jump to the Department of Government Efficiency, though, and put this into context. We're talking about this new Musk Ramaswamy thing. It sounds good. The Department of Government Efficiency, DOGE. The problem is the name itself is a contradiction in terms, because governments can't be made efficient. They have a different incentive structure than the profit and loss system in the private sector. Let's talk about this Lynn program now. That's a private thing. You're not being subsidized by somebody. No. You're not a government agency. You're a private entrepreneur, and you're in the profit and loss system. So if you can't satisfy your customers and do so efficiently, you're going to end up making a loss. And if you make too many of those losses, you're going to go bankrupt. That'll be the end of David Lynn and the David Lynn report. So that's there's a Darwinian process at work in the private sector that weeds out junk and gets rid of things that are junky that people don't want, or that people can't provide and supply efficiently. Now, that's not the case in the public sector. You can screw up your whole life as a bureaucrat, and you never face the music, because no one ever looks after ex post facto a policy has been introduced to see if the thing even worked or not. So that's why you can't make government efficient. That's why you have to cut it down. Now, we had, during the Reagan years, something called the Grace Commission, started in 1982. I was part of it. I participated in the thing. They produced a lot of reports. They also produced 2,500 great recommendations about how to make the government more efficient. And almost none of those were ever introduced, because you got to be realistic. You have to introduce.
Can you give us one or two of these recommendations?
Yeah. Let me give you one precise one.
Yeah.
I was Reagan's privatization guru. I was the guy in charge of getting rid of surplus assets that the government owned, and we got rid of almost nothing. We had great plans. I designed them. I can tell you that they were fabulous. I gave myself an A. Reagan gave myself an A. He let me write the paragraph on privatization in the fiscal 1983 budget of the United States. But you run into a buzzsaw. Let me give you a concrete example. There are lots of surplus Army bases. This is a Department of Defense. Remember, Friedman didn't want to get rid of the Department of Defense? I want to get rid of a lot of the Department of Defense, including surplus Army bases, naval bases, Air Force bases, and so forth. But when you start getting into that, each one of those is located in some state in the United States. And each one of those states has 2 U.S. senators and at least one, maybe more, depending on what state you're in. You have a lot of congressional congresswomen or women or men. and they kick up a stink if you want to shut down a base and privatize it. So that's how the system works. So Musk and Ramaswamy, they're going to run into a buzzsaw like they've never seen before. You know, Musk, he's got a lot of swagger. So does Ramaswamy. Billionaires running around. They can axe a lot of people in their private companies with no problem whatsoever. The shareholders love it. The stockholders love it. Their shares go soaring up. This is not the way the public sector works. So I wish them all the luck in the world. As I did Peter Grace. Grace, a great guy. He by the way, had something that Musk and Ramaswamy do not have. He had the Grace Commission. He literally had 25 well thought out, 2,500 well thought out recommendations, backed up with all kinds of evidence and so forth. Now, Ramaswamy and Musk, they strike me not like a Peter Grace. They're more shooting from the hip kind of thing.
Yeah,
they're kind of gunslingers, and they're going to find out that they might be shooting from the hip, but they're going to find out Congress will start shooting back at them, and the bureaucracy, the civil servants, they'll shoot back too. They'll put up tremendous defenses.
So you're not confident.
I wish them a lot of luck, but I'm a skeptic, and the reason I'm a skeptic is that I understand that incentives are what economics is all about, and the incentives in the private sector are towards making things efficient. In the public sector, they're non-existent. The whole incentive structure in the public sector is to make the bureaucracy bigger, not smaller.
With Scott Bessent being appointed Treasury Secretary, he has a 3-3-3 policy, which is to say that he wants the deficit as a percentage of GDP to be 3%. Currently, it's at 6%. He wants the GDP growth to be 3%, and he wants 3 million barrels of oil to be pumped out every day. Let's just focus on the deficit. 3% of GDP. How can this be accomplished? What is Vivek and Elon with their Doge Commission? What are they not What are they getting? What are they missing here?
Well, the big thing that they're missing, they have actually three things that they want to do too. 3 seems to be the magic number. They want to push deregulation. That's a good thing. We were big into that with the Reagan administration. Great idea. They want to reduce the size of government. That gets a little bit into this 3% deficit thing, and they want to reduce cost. Now, those are all things that are basically income statement issues. They're the flow of taxes and government expenditures, like on an income statement. They're missing the big picture, and the elephant in the room is the balance sheet of the federal government. That's what you want to shrink. And that's what I focused on and designed as Reagan's privatization guru. The whole thing was about, in fact, remember I said getting rid of surplus assets? That's a balance sheet thing. And there's nothing more important than a balance sheet. Now, both Musk and Ramaswamy should know this, but they've missed it. They're talking about all kinds of things on an income statement, like firing people. They want to fire a lot of civil servants. Well, lots of luck with that. But that's an income statement thing. That will reduce what? It will reduce payrolls, and it will reduce pension payments. Mm-hmm. So that's the big thing. My message would be they really have to get into the balance sheet and understand it. And by the way, we have huge holdings of public lands. 25% of the land area of the United States is owned by the federal government. Oil and gas rights, mineral rights, all of these things are on the balance sheet. And what do you do? If you liquidate those and privatize them, you then have liquid cash on the asset side of the balance sheet instead of all these surplus physical assets. And you can use those liquidities to go over to the liability side and pay off the debt, pay down the debt. You're not going to pay it all off, but you can pay it down. And that's where I would be going strategically. I don't think they're there because I don't think they've thought about it enough, really. This is a gunslinger problem. You have to have people who really are experts at this and have thought it through. And that's
one other issue. I don't know if they've thought through this. We haven't talked about this yet. Is there's currently, according to data from the St. Louis Fed, all employees at the government level, or at all levels of government, 23 million people working at all levels of government. Vivek said, and he said this in the Tucker Carlson show, he said he wants to downsize by 75%. So that's more than 15 million people just on unemployment immediately.
Yeah, it's never going to happen. I mean, this is the kind of nonsensical talk. Now look at that. What's interesting on that chart, you see that the level has been skyrocketing, and that's why unemployment is so low in the United States. Most of the additions to employment under the Biden administration have been government employees, and of course they all vote Democrat. This is a patronage thing of the highest order. This is like an underdeveloped country. It's a banana republic kind of chart. It's just to buy votes and to drive the unemployment rate down, down, down. If you look at those employment reports, David, we've done this.
Yes.
On the David Lynn report, we've actually done this. You come out with an employment report, and then you ask, well, what are all additions? And they're always the same: government employment and services. Those are the two key areas where you've had increased employment in the United States and increased labor market participation also.
All right, let's come back to these unemployment figures at a later episode. I want to finish off on Bitcoin. I want to bring up Bitcoin with you because you've been tweeting about it, and I presume you've been tweeting about it because the price is almost at $100,000, which is unprecedented. This is what you tweeted recently. I had a good laugh looking at this. Bitcoin is a highly speculative asset fueled by hype. And then you have this image here of astronomical objects, with Bitcoin being one of them. All right, I'm going to let you explain why you think it's a bubble waiting to pop. But before then, I don't think I've ever asked you about the Bitcoin strategic reserve in great detail. This is Senator Loomis's plan, which I presume is going to come into fruition, or at least partly come into fruition. Implement a 1 million unit Bitcoin purchase program over a set period of time, mirroring the size and scope of gold reserves held by the United States. What do you think about that?
Well, Senator Loomis has just entered Hanke's Encyclopedia of Economic Stupidity. If you can imagine such a stupid proposal, this is like licensing the federal government to go to Vegas and gamble. This is the dumbest thing I've ever seen, but it does show you the level of the political class that's in Washington, D.C. That really is a fundamental problem. I mean, they've got us in two wars right now. Now they want to have a Bitcoin strategic reserve. That'd end up, by the way, like, look at the strategic petroleum reserve. That has cost billions and billions to U.S. taxpayers. One of the dumbest things we've ever done in the United States, the strategic petroleum reserve. So that's my take on the strategic thing.
This is your surplus. This is your surplus asset being put to work. Be paid for by diversifying existing funds within the Federal Reserve System and Treasury Department.
Totally delusional. Name one good investment that the federal government's ever made. You know, I mean, this is perfectly ridiculous.
But okay, I mean, just as a counter argument, I mean, could you not make the same argument against the gold reserve? I mean, what is it doing there? You know, like, it's just sitting there. What is the purpose of that?
certainly isn't fluctuating around too much in value. It's just
Sure.
it's going up, and it isn't that volatile. Instead of being a highly risky asset, it's a low risk asset, and it's sitting there for a variety of reasons. One really is just historical. Gold has been part of the international monetary system since the beginning of recorded history.
Okay. Well,
By the way, I had some of that on my surplus asset checklist in the Reagan administration. I don't think we should be holding that much gold, or maybe much at all. But all central banks do it, and the U.S. government does it too.
okay. Well, so bottom line, you don't like this idea. By the way, the government currently owns Bitcoin, but most of that, if not all of it, is from confiscated Bitcoin from criminals. They just hold it, and now they're going to establish a proper strategic reserve is the plan.
Well, why did they get it? Because that's the only place Bitcoin is actually used by the crooks.
Well, I mean, it's not just used by the crooks.
They've done, by the way, up in Canada, this is an interesting thing. Up in Canada, researchers at the University of Toronto, which is a first-class university, have done a study about who holds Bitcoin and cryptocurrencies. And they were psychologists that were doing this survey, and they basically came to the conclusion that the holders have a very high proportion of psychopaths.
Okay. What? All right. I mean, I understand where you're going with this.
I'm not suggesting that Senator Loomis is a psychopath, but I'm just telling you what the research. Now we're into following the science. You see, Remember that with COVID. Follow the science. Follow the science. Well, the science indicates that you have an unusually large proportion of psychopaths that hold Bitcoin.
Well, to be fair, Bitcoin is used for some other things besides illegal activities. But I understand your point.
By the way, you got to dig deep to find that.
For sure.
The main function, it has really no function, and to give you, put your head around this.
Yeah.
Fiat, it's like fiat money. It's produced with no backing. Okay, so who produces the fiat money in most economies today? Commercial banks do. In fact, about 75% of all the fiat money measured by M2 in the United States is produced by commercial banks in the United States. Now, if they produce fiat money, what's a commercial bank do? It extends a loan to a bankable project that they think will generate enough surplus to pay off the loan. And they use that bankable project as collateral to make the loan. So that's how money is produced in a normal fiat system.
Sure.
How is it produced by Bitcoin? There isn't one damn bankable project. They're not loaning anybody any money. They're just pumping it out.
Yeah. There are derivative
there's
projects
no
built on
bankable
Bitcoin.
project. There's no collateral behind the loan. Bitcoin has no connection to the real economy and serves no function in the real economy.
I like it.
And that's why the only use really is all kinds of illegal activity.
I like to play for you this clip of Milton Friedman talking about a digital form of money. He's not talking about Bitcoin, obviously, because this is long before Bitcoin was created. But I'd just like to get your thoughts on the theory behind what he's saying here. Take a listen. It's 30 seconds long.
I think that the internet is going to be one of the major forces for reducing the role of government. The one thing that's missing, but that will soon be developed, is a reliable e-cash, a method whereby on the internet you can transfer funds from A to B without A knowing B or B knowing A. The way in which I can take a $20 bill, and handed over to you, and there's no record of where it came from. And you may get that without knowing who I am. That kind of thing will develop on the internet, and that will.
All right, there are, privacy token. Yeah.
So the bottom line, he's talking about PayPal before PayPal ever existed, and eCash. He's talking about transferring dollars. That would be the unit of account going back and forth. He's not talking. He's not talking about a digital central bank currency or anything like that. He's talking about a private payment system that would be operated on the internet, in which the dollar would be obviously the main thing being transferred. So my interpretation of what Milton's talking about is basically something like PayPal before PayPal ever was in Peter Thiel's head,
Yeah. Well, let's just finish off on the concept of a Bitcoin strategic reserve. I'm not arguing for or against. I'm just saying the concept. There was a time when gold was money, and so therefore there needed to be a gold reserve. Whether or not that's still useful is debatable. Could you envision a future in which Bitcoin is used as a medium of exchange, and therefore it is necessary for some sort of reserve to be in place? No. Okay. All right. Fair enough. So to go back to your tweet, you think it's all hype. It's a bubble waiting to pop. Why is it a bubble?
It's a bubble because it has no fundamental value, no use. It's going to be, remember the Mississippi Company. Remember John Law, or as the French would pronounce it, Laws. John Law established the Mississippi Company in 1717, and from 1719 in August, when the bubble really got going in the Mississippi, everybody in Paris, everybody with any liquidity, any place in the world was investing in the Mississippi Company. From August of 1719 until December, it went up 333%. Not a bad deal. The problem is it was a bubble, and by 1720 it was worth zero. It had no fundamental value.
So it doesn't have fundamental value. Well, let's continue that another time. Thank you very much, Professor.
Yeah, the trick on Bitcoin, by the way.
Yeah.
Probably the founder of modern economics is Richard Cantillon. He was even before Adam Smith.
Yeah. And
Cantillon ended up being a banker in Paris, and of course he knew John Law. And Cantillon was smart and a good banker and a great economist, a very innovative guy. So he went long the Mississippi Company as it went up, but he knew it was a bubble, and he shorted the thing going down. So he had a wonderful roller coaster ride. He was long on that big increase in value, and he was short as it collapsed to zero.
What if the market, just everybody buying Bitcoin, believes it is money? I mean, whether or not it functions as money, let's assume they're wrong. But if everybody believes it, can it not just become a self-fulfilling prophecy if everyone just believes it to be?
Well, it goes up because of the greater fools theory. That people invest in it because they think there's going to be a greater fool that they can sell a thing to at a higher price, and that's where it's going up now. But and I'm not predicting when, by the way.
Yeah.
And also, I think everybody should be free to invest in whatever they want to invest in. But it is highly speculative. It really is a Las Vegas roll of the dice. And getting back to the strategic reserve, it clearly borders on insanity.
All right, let's end it here. This was a great discussion. Thank you. We can follow Professor Hanke at the link down below. Can you remind us once more your X handle?
Yeah, it's at Steve_Hanke. Or remember, some of your viewers, they want to get on my weekly distribution list, and they can just send me an email at hanke@jhu.edu, and I'll get them fixed up and get them on the distribution list.
Yes, let's do that. Links down below. Thank you very much. Thank you for joining the program. Thank you for watching. Don't forget to like and subscribe, and happy Thanksgiving to all.